Hey everyone, what's happening? Aaron Jackson here, aka ATM Charts, aka Rotation Report, aka whoever. This is not financial advice. Do me a favor and take the damn hint. A lot of happenings today in the market, especially even these after hours. But first off, I want to say shout out and thank you all for the kind words, the likes, the subscribes, all that. Wasn't really planning on turning this into a freaking show or build a channel. Just trying to work on some presentation skills, but you know what? Screw it. Let's go for it. Uh, Might as well. So let's get into it real quick here. First off, Bitcoin, interesting reversal to start the week, right? There is a little bit of a Fibonacci extension there in the very short term. Again, bigger picture, just look at it. It looks fine for now, still fine. But the big happening in the crypto today, Ethereum versus Bitcoin. Boy, and it's even happening here in the after hours. So for the longest time now, Ethereum's been lagging Bitcoin. People have been like, it's dead. Basically, it seems like it's dead. It's gone nowhere since 2021. Anyways, in early May, this thing ripped, came to life for the first time coming out of this downtrend, the steep downtrend. And ever since May, it's traded in it's a really positive configuration here, just sideways range. And now just today, you saw this out of nowhere, just this massive outperformance in the Ethereum and versus Bitcoin. And now it's trying to break the range higher. So we could be looking at, you want Ethereum over Bitcoin starting like this week. You just need one more day of upside there. And then we get into the equities here. It's getting a little slippery, getting a little questionable. It was a nice day today with NVIDIA strength, AMD strength, the big tech, the AI strength. You're like, okay, things are looking good. Underneath the surface, not so great today. You got Russell 2000 Growth ETF, IWO, 287 here. Basically, you're looking under 286, bearish reversal weekly setup here. So could be in play, might not be in play, but be very vigilant in all your risky growth trades. Like some of them are probably still going to work. Some of them are probably going to fail at this point. So definitely just be vigilant. We're all about, it's not about how much money you make. It's about not losing your ass, right? It's about being prepared for risk and then minimizing damage. And then we've got QQQJ. QQQJ. Yeah, say that 5 times fast. Anyways, you think, okay, NVIDIA, AMD, rocking. Well, this thing down 0.7%. It went bearish outside day to day, basically reaffirming the recent high here. Now, ASML reports in the earnings in the morning. Maybe it goes higher, but the risk here is this thing drops like 7-10%, and then like that would change nothing technically. Like nothing would change at all. That's your risk at this point. And then you would just be kind of frustrated, stopped out, and then when the market's ready to go again, you just wouldn't be there. You wouldn't be there. So keep an eye on that. And then the big one, you're going to hear about this one a lot these next few days. It's the S&P 500 equal weight index versus the S&P 500. Now this ratio chart is just made 52-week lows today. So basically people are going to come out of the woodwork and be like, look, the market breadth is narrow. This is led by only the mega caps like your NVIDIAs, and that's true, right? But this is kind of like a thing that'll make people react and like spook them out of the market. But it's also a thing like the CMTs, like these professionals, it's in their textbooks, and it's like just a really popular idea that maybe we just kind of push it to the side a little bit, like, temper the fear when they try to, monger you. So basically what happens with this S&P 500 equal weight index and all these various equal weight ETFs is every 3 months, they sell the winners, right? They want everyone to be equal, right? So you sell the winners, you buy the losers, you sell NVIDIA, you buy Pepsi and like United Health and that shit. Every quarter. That's what they do. And that's basically against the laws of nature. Basically, right? We want an index like the S&P 500. You own the index because, the newer, bigger companies that are thriving, right? You want to own more of them versus the ones that are kind of like dying off, going to hell, right? Because a lot of stocks do fail, right? A lot of companies go under. That's what capitalism's all about. Creative destruction, at least back in the day before zero interest rate policy. But so anyways, you're going to hear a lot about this. Yeah, not great that it's making new lows, probably a bearish thing. So that'll be interesting. Definitely keep an eye out, keep some ears open, because like at this point, okay, it is bad business to be telling anyone anything that's kind of negative, kind of bearish. And so, keep an eye out and see how people react to this, because people do not want to hear about concerns right now, just as all the institutions are piling in and, they're aping in at the moment. So definitely keep your ear open on that. And then, we're seeing more signs of potential troubles in rates. You got home builders, ITB, tried to take back this key 97 area. It's been 1, 2, 3, 4, 5 times now, 6 times. Key area, big pop above it. Falling 200-day moving average almost caught up, and now a reversal back below. So again, like, you might want to avoid this shit. Not messing around with this housing bear market. It could be bad. And we'll look at again the International Treasury Bond ETF BWX. You can see right now at the recent swing low. So I don't think many people are talking about this shit yet. That global, government bond yields are spiking, are rising, and the major low could just be in here. People aren't paying attention, I don't think, but you do have support here. Like, this could bounce. This could bounce if it's going to really need to pull a rabbit out of the hat to turn this thing around, and it has to kind of start now. So if it doesn't bounce, this keeps going lower, all of a sudden it's going to be more people who are like, whoa, what's going on here? This doesn't look good at all. So very early on that. And again, higher, government bond yields, that affects the computers and makes stocks more expensive, right? You do the math, you look at the numbers, and it's just a drag on equities, however you want to cut it. And then, yes, China, large caps, FXI, back at the September momentum highs here. Look, they got the GPUs, lots to like. You could definitely say Baba is more constructive. It recovered the 200-day moving average. You could say it's just all a big consolidation that'll end up breaking higher. Maybe it does. But, we do want to be wary of this kind of old high zone. Again, I think if we're going to be bullish, China, we like the China AIs, like the China Tech, the pure China Tech CQQQ. That's probably where the action would be if it breaks higher. And if you think about it strategically, like, we've got governments all over the world like, oh shit, we need to secure commodities. We need to invest in defense. Who the hell's been planning for this day for 20 years? It is China. It is China. So if anyone's ready to go for some WW3, yeah, it's China. And then, who's not ready for that? Europe. That's right. Euro Stocks 50 ETF, FEZ. Bearish divergence over the last 2 months. Basically, they tell you, oh, Europe's the new place to invest. And then it isn't. It isn't. And now it's out of gas. And, you might get some mechanical buying here. I think odds are pretty good. You want to sell rips and get the fuck out. And so that just about covers it for today. And I just want to say, once again, shout out. Thanks to everyone for the support, all the likes, subscribes, all the good things. And appreciate y'all. And you guys have a great night.